All right, good morning, everybody. So it's jobs today and it's jobs tomorrow. These two different but very important economic events are going to be part of the dot plot that the Fed uses for an excuse to do anything. Right now, if you remember, they skipped. They didn't want to call it a pause because a pause has weight behind it. So they skipped. There's an expectation now that we're going to get maybe one more rate hike, possibly more than one. If we were to keep track of what's happening around the world, other nations are still raising rates. They still have inflation that's out of control. And if you look at the probabilities for the July 26th Fed meeting, we're running at an 88.7% that we're going to raise rates from 5.25 to 5.5. If anything was to knock us off of this projection and they were to decide that we were going to get another pause, I think that would be bullish for equities in the short term. It would add to the bullishness that's already going on out there with all the flows that are coming in that are just so positive. All these beaten down dash for trash names and just basically everything running, right? Everywhere you look. And we can add to that, yield control interception, say through Japan. We are at that level where we really anticipate that they're going to, get off the sidelines and become more reactive in there. That would also um, potentially be bullish for the equities. So there's a lot riding on what's happening with the 10-year. So keep track of that, right? Keep track of that. Keep your eye on the prize. And yesterday it kind of got out of control. It got above that 3.9%. We want to keep a real close eye on what it's doing. All right, so for today, jolts. We got crude inventories, which normally would be on a Wednesday, but because of the holiday, they kicked it back a day. ISM services. So a lot on the table, including vehicle sales. And if you haven't seen what's been going on in the EV market, I mean, those things have been just they've woken up. Let's put it that way. Yeah, but even the more legacy things like Ford and GM, you know, um, kind of fits into the value names that are coming back alive. And we have additional auctions today as well. So once you get into the afternoon today, you should be good for your 0-day plays, but it's a full house through the morning session for sure. So we can see, looking at the global discussion on finance juice, all eyes are on bonds and what's going on with central banks raising rates to control inflation, and governments around the world messing with their 10-year. We do have a European central bank speaker today as well at noon. My time frames here are local, so we have to add an hour to it. So Logan at 8:45, Jolts at 10, and then the ECB speaker at noon. I think looking at it on the Thinkorswim really kind of just summarizes how much stuff we have going on this morning. All right, we are inside day breakout. We can see that on the daily chart here, and we're below that 50% mark. The 50% mark that I have here is from June 30. I just measured the high and the low of June 30 and marked the midpoint for a surge that needs to stay above the red line. But it's a daily chart, so it's a daily close that we want to focus on. You can see that we tested the 4 yesterday and it held. And we tested the 4 again today and it didn't hold. We broke through it. Now the next 50 is the bottom of the June 30 candle. What that is the 50% mark of last week. So if we were to measure the entire week from high to low, 50% would be that 44.33. If we're going to keep the trend, we have to stay above that, right? We've already lost the surge. We already lost the momentum. And if this was just a healthy pullback, then it needs to maintain that June 30 candle. To kind of give you an example of what this would look like, here's the same pattern, just in a smaller scale, right? We had a little bit of a scoop and then 2 days of weakness, breaking through the midpoint of that candle, but recovering, right? That's the key. It recovered and then we continued. So it's on the hook today. How this day closes is going to be directly responsible for whether or not we're going to continue this leg up and get above 4,500 now, or if we're going to have to retest the lows of that scoop pattern around 43.80, maybe 43.50 area. Definitely testing the 20 next, right? We'll go right through that 10. That won't even be, an issue. Markets made it down to the ADR half in the overnight hours. The ADR half is a part of this 21-day ADR. We've got a 0.92. So a 21-day average daily range, which is ADR. I just added up how far we moved from our highest point to our lowest point over the last 21 days, divided it by 21, and got our average daily move. Then split that from where we open in the Globex, right? If we have, just for an easy conversation, if we have a 1% ADR, we could move 0.5% up and 0.5% down. That would be a full 1%. But we could also just go up 1%, or we could go down 1%. So we need a ADR half, which is where that red line is. And then we need a full ADR, which is where this yellow line is. Right now we're getting close to a little micro double bottom here. Going to retest that ADR, which happens to also be the Globex low at this point. And below that, we've got a voodoo line I believe that one's called trees. At 44 roundup, call it 44.60. And then the ADR and a weekly pivot point as well. The 10 EMA is also down there, 44.47. And looking at the volume in the overnight, it's not that bad, right? It shows that they were engaged and were participating. They weren't sitting on the sidelines waiting for all of this economic stuff that's already on the table. So they're in there, they're getting after it. 10-day, 30-minute volume profile, even though this is a massive shallow area, we continue to find structure and support in there. And I'm going to contend and continue to point out that it has to be a correlated market that's hitting something. It could have been an inverse correlated market that was running up and hit something. It could be a correlated market that's moving in the same direction. But whatever it is, something else found a pivot point or a reversal that highly correlates with the S&P, either in an inverse relationship or not. And that's why that reversal is here. We didn't hit a pivot on the ES. There's no pivot here. So we know that the S&P didn't fade down to support and then bounce and rally off support because there is none. And it should have moved through this zone really quickly. And yet it continues to stall and get hung up and find some support from something. So you're not missing it if you're trying to find, hey, what did we bounce off of? We didn't. Something else, right? So I mean, you could try to hunt it down and see, try to find it, but I mean, I think it's a goose chase, right? That we really don't have to know what market it is. We just have to recognize that the possibility was there, and it was. We knew that it was, and then it held, like we had discussed that it could have. One of the best trades yesterday was that double bottom that I talked about in the pre-market in the briefing yesterday. So we do have a VPOC, surprisingly, over our head now. So 44.84. And to the downside, we have 44.30, just kind of rounded a little bit. We talked about it yesterday, but that 50% mark is kind of close to the weekly expected move low. So something to consider. Right now, we're a long ways away from that, sitting at 44.62, and that's all the way down in the 44.30s and then in the high 20s. We're really close to resetting how far away from the 10-day moving average we are. So this thing happens to run, more like waves. The blue line in the background kind of smooths things out a little bit. And while we don't have to go all the way back down to the 10, considering we haven't really gone below it for a while since the May, right? We kind of dipped below and came right back up with strength and conviction behind it. It wouldn't surprise me if we get a little bit of a deeper test this time, if we do happen to go through that 10. So it's worth watching, kind of keeping your eye on that daily 10 and how far away from it we are. The 10 week is a 50-day, basically. I mean, it's not a perfect correlation, but if you don't want to jump over to like a weekly chart, and you just happen to be on a daily, you got your 50 already loaded, just look at where your 50 is. It's going to give you a good idea where that 10 week is at. Right now, we're still 2.9% above the 10-week, which is still really healthy, a little overextended still. But, when we're asking that question, are we overbought? Are we oversold? Have we moved too far, too fast? Nope. And in fact, we're moving back towards the center of the court. If you think about it from, say, a basketball point of view, the entire game starts in the middle, and then you move left or right to reach your objective. If we were to consider the high end one side of the court, say, goals on the home team, and then minus 5% the other side of the court, basketball goals from the opposing team, then right now we're just moving back to the center of the court. It's interesting that this move happened before the kill zone. Like normally a move like this would happen, between 2 and 4, which is statistically the time period in the day where we see the biggest moves, bigger than the open, bigger than power hour. It's between 2 and 4. So seeing this a little early ties right back to the economic event that happened last night at 10 o'clock. So right now we've got a bear flag. We're looking for either a bear flag failure, which would begin to run us back up in the other direction, or a bear flag continuation. And since it's all related to measured moves, we could just measure all of this out and plot it down to the next level using a basic fib with a little extension, say the 1, 2, 3, 6. Did I break it? So we got the warning center at 44.60. And we've got the next target at 44.57. If we continue to the downside, which considering since 3 o'clock this morning, we've been dancing around these lows, there's no strong push at the moment to really continue this move to the downside. This 15-minute candle seems very aggressive to the downside, but it basically reset everything that's been going on since 5 o'clock this morning. So the last 3 hours were just wiped out there. All right, so yesterday it was the EV market, airlines. Little by little, it seemed like everything started to come up and really recover nicely. I mean, there were some interesting moves in sectors that we don't normally look at too much, right? There's not really a good ETF that you could use to look at, say, the EV markets, right? When we look at SMH, for an example, we're looking at an ETF on semiconductors. When we look at that ETF, we got a pretty good idea of what's happening with the semiconductors in the pre-market. We don't really have an ETF that covers something like the EV markets. So what I do to kind of get around that issue is build a watch list that has these peer groups and then use that. So for an example, if we go to the EVs, because we know they did good yesterday, to get a pretty good idea of how the EV markets are doing in the pre-market, I just look at everything on my list all in a group. Are they up? Are they down? Are they flat? And my benchmark is about 0.5%. So we can see, looking at this, that the dominance here is we're down at least 0.5% or more. across the board: Tesla, GM, Ford, Lucid, NIO, XPEV. There are a few holdouts. Rivian, for an example, which wasn't doing good yesterday, today is doing a little bit better than its peers. But you got to be careful, because in the pre-market, if depending on what machine you're using, it might still be reading quote after hours rather than pre-market. It's not doing it here, but we don't know until we look. So Rivian had that little bit of a gap down, and now it's run back up again. On the daily chart, it's almost easy to get lost here. It's way over here at 2049 after yesterday, which would almost look like a mistake, right? So either way, EVs were doing good yesterday. They're not doing so good today. Chip names were good yesterday. Again, not so good today. It's not hard to figure out that almost everything that we're going to look at this morning probably isn't doing so good yet. With the S&P getting ready to break new lows on the morning session, and tech down, semiconductors down, the China ADRs are looking pretty good, right? We can see this is a pretty long list. I gotta take a lot of these names off, it looks like, but maybe call it 50-50 on those. I think maybe my list got corrupted here. That's a long list. Yeah, you know what? Let's do it this way. We'll just look at KWeb. Okay, so the China ADRs are not doing good this morning. Gapped down, still sitting at those lows. And if we were to back that up with something like emerging markets, also gapped down, really no flows in here, but certainly looking squishy. Something's wrong with my China ADR list. I'll have to go back in and see what's up with it later. Airlines was another sector yesterday. It was doing good, all down today. Even energy is down today. Crypto. All right, so we got a little bit of activity here in crypto. Coin, BITO, MSTR, Riot, Mara. So there are a couple of names that are doing reasonably well this morning. It's hard to believe that, no matter how bad of a day it looks in the indexes, that you can nearly always find something green, right? Nearly always. So this morning, we want to keep our eye, if you're looking for long plays, on these crypto names. Just keep in mind in that crypto list, we have things like PayPal, Nvidia, and they're not doing so good, right? AMD, Taiwan Semiconductors, Square, they're not looking so hot this morning. The ones that are more blockchain related, Riot, Mara, all right, they're doing pretty good. Well, they were. It looks like they're giving it up though. If that was our holdout that was helping us, then we're losing some of the last of the holdouts. It's very likely that we're going to get a decent measured move in the S&P and the NASDAQ today to the downside. Could get a really nice recovery, but so far every single sector and every index and every peer group that we look at is in the negative, or like these Bitcoins headed into the negative. So until something breaks or something gives that turns things around, we're going to get a nice measured move down. And we kind of need it. I was talking with somebody yesterday about how we're sitting at this very high level in the market, and the only ones who want to buy up there are the ones that have to, the CTAs and those volatility control funds, because they don't have any discretion on when they buy, right? They have to buy and they have to sell when their tools tell them that they are going to buy and sell. So they're the only ones buying it way up at this level. We need to be able to convince others to participate in the markets. And so it's like they need an excuse. And a little bit more of a pullback might give them that excuse. All right, even the pot stocks aren't doing anything this morning. So I just went through basically all the watch lists in the different groupings that I have. And other than the Bitcoin stuff, nothing is even remotely green. And the Bitcoin stuff is losing its grip. So there's nothing. Which individually leaves us with names like Meta this morning had news. And it's got a nice bull pennant continuation. Gotta say that's pretty nice looking. Nearly a 45-degree angle here on the daily chart. That is a textbook picture of perfect. Hasn't touched the green line, which is the 20-period moving average, since earnings. The only thing to be worried about now is linear regression. So if you use your drawing tool, it's the R line. Just start at the last pivot point or the last low. Run it up. You can see it's a little bit of a sine wave each, high, low, like a wave through there. Right click on that same drawing and redraw as a channel. That can give you some structure. I think looking at it on a weekly might give you a little bit better perspective. And other than this one, there really isn't a whole lot else that we have, right? We got maybe a couple of the other FANG names. Some short plays. All right, so for Amazon, for an example, 127.35. This is a collection of trash, right? It's just a whole bunch of sideways. We are IX10 inside of this candle right there. And until we get out of it, we really don't have a bigger trade to take. But a shorter term trade could be just targeting, say, the low of the previous day or the low of the 30th at this point. We are down to 129.50. So we're sitting right now just inside day breakout, just barely below this blue candle. A move to the downside getting below 129 offers that 127.35, the 50% mark. And that's a reasonable target to the downside, right? For a single day, because this has got enough legs to walk down there. We got an ADR on Amazon at 2.36. So we could easily do that, right? It's a $3 move on average. This morning, Tesla's at 281. It closed at 282.5. So still inside day. I would focus first on that June 21st candle, right? That's 276.99, or call it 277, just kind of rounding up for some easy math. And 265 is where we have a little bit of structure from this old gap that really hasn't. Yeah, it has. I was about to say it hasn't really been drove through on an RTH time frame, but yeah, it has. That gap is done. So we can take that off the table. If we can get past 268, then we're going to look at closing this weekly gap at 261. Call it 261.77. Sorry, I had to take a little profit off the table. All right, NVIDIA closed at 423 and we're at 422.5. So a little bit of a fade here as well. Still got the lines in play. $422. I think on NVIDIA, an inside week breakout. All right, so we've got the low of the week set right now, 420.85. Yeah, I don't like it. Let's see. So with all of these, they're trying to work up off of the bottom a little bit. There's no expectation of a good play until we get outside of that range. So for a short, we got to at least break down below the yesterday's low, 418 and a half. If we can't get that, then we don't really have a good short. And for any kind of a long play, you got all that trash from yesterday to work through. So really no expectation of a good move to the upside until we get through all that trash, like a top side breakout. At the very least, just closing the gap would make sense, but that's not much of a play and really not a whole lot of confidence in that play. So I think you're going to find that to be the case with a lot of what we have this morning, right? There's really just not much going on for an opportunity until we get outside of that. So the S&P is outside of it. For an example, we got the inside day breakout happening with this beautiful leg down in the S&P. Notice we got to the 1, 2, 3, 6. So we would anticipate opposite candle color here, that when this candle that we are in currently closes, the next candle will doji and or be an opposite candle. And if it is, then we'll move that fib down at that point, right? Use dynamic fibbing. Fibbing? Is that a word? It's too early in the morning for that kind of word. So the ES or the S&P has that inside day breakout, but semiconductors, or at least the NASDAQ, doesn't. And NVIDIA doesn't. Which kind of implies maybe that it's the financials that are really getting whacked. We got XLF a little soggy, not looking that bad. KRE looks worse, certainly. But that doesn't seem to be enough for the S&P to be moving like it is and not seeing the NASDAQ participating. I mean, sure, it's down, but it's not inside day breakout, not like the ES. So we went through that voodoo line like it wasn't even there. And the next one is also tier 1 alpha and, Trady Tick and all those guys. They're calling that a gamma level. So it's a really big deal, 4450. Very likely at this point that it's going to just be gravity and that we'll go there. It's hard to see that we go to 56 and that we don't also just go ahead and go to 50. For the NASDAQ, we got this really nice double bottom forming, or triple bottom at this point. The thing is, it was a nice double bottom when it was back here. All right, now at this point, being a triple bottom, it's still the idea that it could be a bear trap, but I'm less convinced of that. And we've been getting VWAP parity pretty good, right? Like say 0.2% to the upside with a 0.2 to the downside, and then it expands to 3, and then we get 3 on the other side. So at this point, we want to see a test on the low, that Globex low. And if we do happen to break down, you've got a nice area to measure. Just measure this little bit of a range that you have here. Right? You don't need a fib. You can just use like the quant tool, measure this range, and then plot 50% of it and 100% of it. And that would get you to 43 and then 22. We can see the dollar is falling in this move, and that the bonds are trying to come off the bottom. I mean, they're trying. It's not looking very good yet. And the 10-year is kind of fading back a little bit from that 395. it needs to get solidly down below that 3.9, right? And the fact that we're at 3.95, that we're halfway through is it's a little bit of a concern. That's been the line in the sand for a while, right? That 3.95 or 3.9, not even 3.95. But it's been a weekly level that we've been looking, and the week isn't done yet. So the fact that we're above it is a little bit of an alarm for concern, and that it's going to be negative on the equities. But the week isn't done, and we still need to see volatility pick up. Okay, volatility is picking up a little bit. That's not much yet at this point. It's a good start. And if we bring it out to the daily, we can see that we're finally uh, giving a run to this range that we've been in for a while. So right now, really keep your eye on that 10-year. We want to see that it comes back down inside, gets below 3.9. And if it doesn't, then we're going to expect this weakness to continue with more opportunities for a short play in the ES and say in NASDAQ. I think right now the NASDAQ would be the better play since it hasn't yet broke out of that yesterday's range. It's trying it right now though. So a new Globex low and now a test of yesterday's low. Institutional pivot point is what I like to refer to those as. But when I say institutions, it starts to screw people up, right? And they start thinking, oh, institutions. No. That's not what I meant. So I don't use that word very often anymore. Has a really big double bottom. And double bottoms are a bear trap. So until proven otherwise, that's just a double bottom. But considering the ES is pressing to the downside and not stopping yet, there's no expectation that this is going to stop yet. And I would run with the measured moves until we have something else, right? So 15,187 is where there's some structure, or you could just use, like the measured move of the range. It's hard to do that when it's a line. So there's the range. Just measure that, plot the distance. $166 is what we get out of that. Cool. So pretty simple day today, right? Everything is bearish. There's no signal anywhere of a bullish sector or a bullish reversal or any kind of rug pull. No shenanigans or anything like that. The only way that we're going to move to the upside at this point is if data comes out that turns the market sentiment around, which won't be hard to find, right? It'll be something like the job numbers today. We know that the plunge protection team isn't going to come out and try to play save a hole. So we don't have to worry about anybody coming out on the Fed side, chipping teeth and trying to say anything that saves this market from going down. And this move to the downside at this point, we're not talking about, revisiting the lows or anything like that. We're looking at a strong, healthy market that's getting a minor, gentle pullback. So just, kind of keep that in mind. This is short-term stuff, right? That's what I got for you guys. Be careful, be safe, watch the clock, and keep your eye on sentiment today. We're looking for a reason that this changes, but I don't have a lot of hope for that today. I'll see y'all tomorrow.